If you look up at Treasury yields, they're down, what, about 60, 65 basis points from their high yield close around 3.25. So here we sit. That's about, what, 20% off the highs? I look at the Dow, 25.6, so 25 handle. The high's 2,600. Well, that's roughly 4%. So we're 4% from the highs in the Dow. We're 20% off from the high yields in the 10s. How do we reconcile those two?
Rick, you got a lot of cross currents going. A lot has to do with central banks. Some has to do with this theory of the MMT. Some has to do with the Japanification of Europe. There's in central banks, it doesn't look like we'll ever be done with them. It's probably be 10 years between the time the European Central Bank raised rates to when they raise them again. So you've got a lot of conflicting signals right now. And meanwhile, 10-year treasuries still seems to hover around 260, 262.
Yeah,
They've been there 10, 12 times.
You remember a year ago when many investors were definitely complaining, pulling out their eyelashes. Oh my God, rates are going up, it's going to kill stocks. Truly, rates going up in partnership with the equities moving up, and the type of data points we're getting a year plus ago, that was the perfect blend. You could call this Goldilocks, but how long can it last? One of these markets needs to blink unless the international sovereigns are going to really cave.
Rick, you know, one of the things the equity markets are looking at is continuing improvement in the tariff situation with China, even though I seem to see every other statement is a bad statement as well. So there are a lot of people on the sidelines, Rick, and I think that's what what equity people are worried about. And in the bond area, I think they're worried about the huge government deficits and the amount of supply. I mean, if you look at where bunds are, 10-year bunds versus 10-year treasuries, yeah, sure, they still seem to move in the same direction, but the magnitude, 10-year bunds are significantly lower in yield than 10-year treasuries should be around 250.
If you ignore the scale and the basis points,
right,
the patterns do look somewhat similar. Real quick, right, we have 40 seconds. Let's get right into it. Kelly's been talking about, you know, modern monetary theory policy. It's the epicenter of the new political undercurrents in the Democratic Party, and you are now placing that firmly as an economic fundamental? Finish it up.
Rick, I think the MMT theory is absolutely wrong. I think it will fail, but nonetheless, you know, a lot of people are talking about it right now, and I think with with 22 trillion of outstanding debt right now, I'm afraid it's going to go higher before it goes lower, and that's why we're struggling to get through 260 in the 10-year.